This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in raising funding for your startup? For your next fundraise, consider 10 Capital Syndicate Platform, an online portal using a special purpose vehicle. The Syndicate Platform allows for online investment and access to over 12,000 accredited investors. Log into the 10 Capital Syndicate Platform to find your next investment. To learn more, go to 10capital.group/SPV. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Avetis and Antaplyan, founder and CEO of HIRECLOUT. HIRECLOUT is a technology recruiting and consulting firm focused on building relationships that deliver results. Avetis, thank you for joining us.
Thank you for having me, Hall.
So what was your background before investing in early stage companies? What did you do before this?
Hall, before I did this, before being an entrepreneur, I was a senior director of operations at Kaplan. So I did the corporate route for many years. Decided to do more, make a bigger impact. So I left that world and joined the crazy entrepreneurial chaotic world.
Well, great. So what excites you right now?
What excites me, I like startups with a game plan and maturity, and companies who are making an actual impact on the world. Less fluffy nonsense, more real impactful products and services is what I'm really excited about.
Great. Well, you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
Clearly, due diligence, right? Do your due diligence. Although there are a lot of great startups out there, valuations and confidence is through the roof. And so I'm always wary of investing in such peak markets. Although it's exciting, we all want to take part. Definitely be careful, do your homework, do multiple calls. Most entrepreneurs that are confident in their business are more than willing to have multiple meetings and show you a little bit more about what's under the hood.
Well, great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
Before they raise funding, I think one thing, Hall, from previous conversations you and I have had, I think it's good for them to get a product out and actually sell the product. Folks like you and I, typically, we want to see some revenue, even if it's 100,000 or 200,000. It shows that the product is sellable, that there's some interest, there's reorders. So that's extremely important. So I would say try to get a product out and actually make money before you go raising money, because you'll get real valuations and real investors who are going to be bought in long term, who will double and triple down on their investments. So I think that's huge. And more importantly, hire great people, right? Lead them in the right direction and focus on the most important things and stay focused.
Great. Well, let's talk about the state of startup investing. How do you see the industry evolving from here?
I see a lot of good automation, AI, robotics, and data companies, and I think that's where we're all headed, obviously. And so the industry is evolving towards investing in that sector, from what I'm seeing. And also, there's a lot of interest in healthcare. I think people, again, are tired of just dealing with the same old same and want to make an impact, even with their checks. And so I think companies that are doing something impactful for people's lives tend to have better mission and more exciting longer-term products, I think.
Great. And so what do you think is the biggest change we'll see in, say, the next 12 to 24 months?
Tech overall is evolving very quickly, as always, but I think the key change over the last 2 years, it's become a global market where you can hire anyone, anywhere in the world. You could start a company anywhere in the world and sell it to your desired market. And investors can also invest in anything, anywhere with some Zoom calls, right? So before, we were all regional focused. I invest in companies in the US. Hopefully they're in LA. I want to be able to meet them, shake their hands. And if you're in Europe, there's a lot of good startups, let's say in Armenia, and they typically would have to start selling to that market and then open it up to the Eastern European market and so on and so forth. Now they're going straight to the US or Europe, wherever their main market is. They don't have to sell locally.
Great. So what is your investment thesis? What do you look for in a startup?
Nothing so unique or so exciting. I mean, I look for companies that that are in the right market and are poised to do something good and are aligned with the trends, right? And not short-term trends, long-term. I look for companies that are long-term and enduring. That these guys they're gonna survive the next ups and downs. It's not going to be flavor of the month or something that could be deleted. And also, I kind of look for specific reasons why this company is worth their current price. That's another. Valuations are always weary, right? Because they all put a $10, $20 million price tag on something that has no revenue. So I look for all of those things. And more importantly, I just look at the person. I look for great founders who are focused, take feedback well, and are excited, and are bought in full time. This isn't something they're going to try and then 6 months later they're going to pivot to another company. I want them to stay on course.
Great. And then on specific startups, what do you look for that fit your thesis then?
Like I said, I like the robotics and AI space, right? I like companies that have a platform that could to give birth to many products. It's got to be an amazing product if it's just one. Companies with a real mission, all of that stuff.
I got you. Okay. So, you see a lot of startups and investors out there. What do you think is the main challenge startups face today that you work with?
Hiring. I think hiring is a hot mess right now. It's going to be very, very difficult to hire, especially if they raise enough money to hire a lot of people. They're going to have a tough time paying the kind of salaries that people are expecting, and the benefits they're expecting, and this, the RSU packages they're expecting, and the flexibility they're expecting. So I think hiring is a major issue. Even before, you would just hire, a small team or pass it off to a small team overseas, but those prices have tripled. So now, no matter what you're doing, there's a massive competition for talent. And so it's going to be challenging to hire good people and keep them in their seats for a long time.
Right. And then on the side of the investor, what's the challenge they face today?
Valuations. Right. Again, it's funny. I've never talked to a startup that doesn't think they're worth at least $10 million. And I think the minimum check sizes are a bit insane as well, right? So a lot of us are more than willing to do $10,000, $20,000 investments just to spark. And it's a fun gamble, right? It's a little bit of investments, a little bit of a gamble, but I'm hearing $50,000, $100,000 check sizes, minimums, and then you really have to be prepared to double down on that, right? And so you want to think, do I really want to invest $100,000 in a startup who is probably poised to fail, right? As I don't know what the exact numbers are. Maybe you can tell us, but I'm guessing 95% of startups are failing, or they just end up being lifestyle businesses that have very minimum exits.
Yeah, I think that's it. My assessment is, the top 10% of startups, go on to a big exit. Next 15% go on to something of an exit. The bottom 75% have no exit. And
Wow.
A big part of that are the lifestyle businesses. So only 25% are going to make it overall. And that's just a rough metric on all aspects of the startup world, including venture funds, angel funds, group funds, startups themselves. So it stays remarkably consistent throughout for some reason.
The 25% was an interesting stat. Is that the overall from 100 companies, only 25 will survive, period?
No, they will have an exit in the sense that you'll get a return. So the idea is, Crunchbase did a report a while back that says out of 100 investments, 60% of them will not have a follow-on fundraise. They do a first raise, but then they don't do a second one. So right there, 60% are off the venture track, so to speak. They're now going sideways, like you're talking about, turning into a lifestyle business. And ultimately, only 16% will have a exit. Although I found that investors do at 25% will get something back out of it through various redemption rights or what have you. If they don't have a formal exit, you can get out of it. But so 25% are giving you an exit and 75% are not. And same thing with venture capital funds. Top 25% return something. The bottom 75% don't return anything to the investor, especially after you take out the fees and the carry and all the things that go with that.
Great data. Thank you.
Oh, sure. So you talked about the different applications that you think are hot these days. If you had to pick one or two that are at the top of the list to invest in today, what would you put up there?
Whew. The scariest, but I think something that we should all expect is automation and AI, right? Replacing so much of work that humans are doing. Long term, 30, 40 years out, this could replace 80% of the work that humans are doing, which is obviously something we all worry about. But I think for now, I think it's replacing a lot of redundant things that we don't want to do. So I'm very, very passionate about that. I like robotics where it fills a need for people in need, right? So if it's nursing or folks that actually, I met a startup company that their robot actually, would move things around for folks that are disabled. So some people can take stuff out of a laundry, but they can't carry it to the room. So they can take it and give it to this robot and it walks it to their room, things like that. Or in the nursing space, there's not enough nurses out there. So now there's a robot, pretty cool one that's talking to patients, is making them smile, potentially checking their temperature, being there for them, especially kids. So anything in that world that's helping people, especially kids or people that are disabled, I'm personally bought into.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
You tell me. I mean, I'm excited about the startup space. I'm hoping this continues, right? We'll see what comes in the next couple of years, but overall, great market, a lot of exciting products and services, and it's no longer constrained to the US, right? We have startups all over the world that are exciting and we can invest in now.
Well, this brings up a good point. I'm getting increasingly a lot of calls from outside the US, Europe, Middle East, Africa, Asia, Oceania, and so forth. What's your take on the internationalization aspect? You mentioned a moment ago we're probably no longer just going to focus on our local region. Zoom opens it up to anyone in the world. How do we handle internationalization where now we get calls? I was in a pitch session yesterday with Romania, and
Wow.
The deals looked just like they were here. They were
Absolutely
doing retail deals with AI technology, and they had a nice back end and so forth. And we all voted on which ones we liked and so forth. And it was all in English because many of the people were from other parts of the world, but they were in that accelerator for various reasons. And so, and then I was in a clubhouse room earlier this week with a group of investors, and I had the Houston Angel Network team on, and they were talking about the need for how do we manage international startups, because angel groups, at least when we started, Central Texas Angel Network, Houston Angel Network, you had to have your headquarters in Texas. Well,
oh wow.
And then Baylor Angel and some of these others said, well, you don't have to be in Texas. You can be anywhere, because their group was everywhere across the world, mostly the U.S. And so now we're moving away from that. And so I guess we're trying to figure out, how do you vet and manage deals that are now coming from Europe and Asia, and how do you deal with that?
6 months ago, I would have told you I don't, right? A year ago, I would have told you I have no interest in it. But what I'm finding is that the pitch sessions happen. Sometimes the quality isn't great because half the people are there, half the people are on Zoom. So I don't love that component of it. But then when you request a meeting directly with the founder, it's phenomenal. You could talk to them. Like you said, most people speak English now as a second language. I've been doing a lot of work with startups in Armenia. There's a big tech hub there, and everyone speaks English. Everyone understands business. There's really no difference. A lot of them are, have connections to LA, so they've flown here. I've met many of them in person. If I need to go there and fly, I'd be happy to fly. It's a great little place. So I think, logistically, I would want to go through some kind of fund, right? Just so I don't have to deal with paperwork. And by the way, most of these companies are Delaware corporations anyway. So even though their headquarters might be in Europe, most of them are US-based, technically US-based companies. So I don't see much of a difference, to be honest with you.
I don't either. From the legal requirements, I started coming across more solutions, mostly out of Europe, where they do a special purpose vehicle, but they can take any international entity and a Delaware C, and they can combine that into one. And so I thought that was kind of interesting, is that you can start to find special purpose vehicles that would cut across the different legal entities that are out there and start to be relevant to the U.S. Because in the U.S., if you're not Delaware C, it's just very hard because be honest, most people have their documents set up for Delaware C. The case law is the best there, and they're not going to move off of that. So if I can invest in a Delaware C, I'm going to be interested in that. But then if you can get other people to come in at the same time, but be in the special purpose vehicle with different entities and different structures, it seemed like there was some movement there to normalize that or combine those into an interesting way. So somebody international raising funding could get money from Europe and US and other places without having to go file 5 different entities.
Absolutely. And most of these startups anywhere in these countries are mostly US is their main market anyway. Right. So it's either Western Europe that they're after, or it's the US. Usually it's the US. So their products and services are designed mostly for US need anyway.
Well, a lot of them are coming to the U.S., and we've dealt with many from primarily UK, Israel that we've done so far, where they have a vision of starting a U.S. company and flipping it at some point to be U.S. Centric because of tax laws and other reasons. Even though the R&D team will probably stay back in the home country for the duration because of social and economic reasons, and but up front, they're coming this way, and they don't quite have a presence here. I did find somewhere a little bit challenged to participate in the activities, events, and so forth if you weren't on the U.S. time zone. I've had many clubhouse meetings late in the day and U.S. Central Time, and in Israel that's 2 a.m, and so it was just a bit difficult for them to participate in some of those things once you got past the legal entity stuff of it.
Very true. I've found that some of those countries in Eastern Europe, at least culturally, they're used to being up at 12, 1 o'clock or 2 o'clock. So believe it or not, most of my Zoom calls are my 9, 10, 10:30. So they're talking to me at 10, 11, 12 o'clock at night, like it's nothing. As long as you're comfortable being in their living room, it doesn't matter anymore.
Yeah. Well, that's a good point. Well, we're having a follow-up session here in a few weeks with the team to talk about internationalization, because the investors brought that up to me. How do we handle this? How do we engage with this? And I think people are looking for some assurance that what's on the other side is a trusted source. If we're not going to be able to drive across town to meet them, what will take that place? What would you think that is?
Wow, it's a great question. I would say further vetting. I think most of these folks, first of all, if they're serious, they would come to meet you here, right? So if you have 4, 5, 6 investors ready to go with checks, I don't think it would be much for them to fly across to meet you in Houston or Austin or wherever you are. Second of all, obviously, if there's enough interest, you can fly, or honestly, you just do more vetting. So there's a startup that I'm interested in. One of my friends had a really good idea. Why don't you vet out one of their resellers, and see how passionate they are about the product and how are sales going. I thought that was a really interesting thing, something I wouldn't think of usually. Meeting their co-founders, meeting advisors. People put all kinds of advisors on their list. And a lot of times it's just friends or buddies that are willing to be on the pitch deck. But if they're real advisors, I want to meet them. I want to, or the investors prior to us, right? Usually these companies have had some kind of investment, whether it's friends or family or an angel with a lot of money. I'd like to talk to those folks and see if they would invest again. Are they doubling down? Why or why not? Sometimes they're not because they don't believe in the product or service. Sometimes it's because they're all in on round 1 and they don't want to do it. They don't want to go all in. So I would just say an extra vetting step or 2. Same goes for hiring, right? It was always a phone interview and then an on-site and possibly a second on-site. Well, on-sites don't exist anymore. I don't do on-sites anymore. My clients don't do on-sites anymore. So how would you hire? It's a risk. Hopefully you do enough Zoom calls and enough vetting that you actually can understand them culturally. I never thought this would be possible, to actually know how someone is over a Zoom call. You're definitely missing things. So you have to take some additional steps of vetting. But other than that, I think it's very possible.
Well, that's good advice. We're going to have some meetings here pretty soon, and I think angel groups are going to have to start taking a perspective that's more than just local in what they do, and it'll be interesting to see next steps that come from it. So appreciate you sharing that with us today. How best for listeners to get back in touch with you?
LinkedIn is great. Avetis Antaplyan. I'm probably the only one in the world, so you can find me pretty easily. Or info@HIRECLOUT.com will find its way to me as well.
Great. We'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up.
Thank you so much. Appreciate it, Al. This is wonderful.
Great. Thanks. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.